Dear students, Assalamu alaikum. In today's lecture, we will discuss one more method of measuring national income, and that is the income method of measuring national income. Students, income method measures national income from the perspective of factor incomes, or in other words, we can say that this method measures national income at the phase of distribution and appears as income paid or received by individuals of a country. Under this method, incomes received by all the residents of a country for their productive services during a year are added up to obtain the national income. Individuals earn incomes by contributing their own services and the services of their property, such as land and capital, to the national production. Therefore, by using the income method, national income is calculated by adding up the rent of land, wages and salaries of employees, interest on capital, profits of entrepreneurs, and incomes of self-employed persons. This method of measuring national income has the great advantage of indicating the distribution of national income among different income groups, such as among landlords, owners of capital, laborers or workers, and among entrepreneurs. The main steps involved in measuring national income by using the income method are: firstly, we had to identify enterprises or various sectors such as the agricultural sector, industrial sector, and tertiary sector, which employ factors of production such as land, labor, capital, and entrepreneur. The second step is to classify factor payments into different categories. Dear students, the factor incomes are grouped under three important categories. First category of factor income is compensation of employees. Compensation of employees is the reward or compensation paid to employees for rendering their productive services. It includes wages and salaries in cash, payment in kind, employees' contribution to social security schemes, and pension on retirement. Second category of factor payment is operating surplus. Students, operating surplus includes income from property and entrepreneurship. It is earned in both private and government sector. It includes rent, which is that part of national income which arises from ownership of land and building. Interest, which refers to amount received for lending funds to productive units. And profits, which is the reward to the entrepreneur for his contribution to the production of goods and services. It is the residual income which an entrepreneur earns after paying all the other factors of production, that is, after paying the wages, rent, and interest. Students, profit includes dividend, which refers to that part of profit which is paid to the shareholders in the ratio of their shareholding. And this part is also known as the distributed profits. It also includes corporate income tax and undistributed profits. That is the amount which is left over after paying corporate tax and dividends. So we can also call it as the savings of enterprise. Dear students, third category of factor income is mixed income. Mixed income is the term used for any income that has elements of more than one type of factor income. It refers to the income of self employed persons using their labor, land, capital, and entrepreneurship to produce goods and services. These incomes are mixed in terms of wage, rent, interest, and profits. And these elements cannot be separated from each other. That is why these are called mixed incomes. For example, income of a doctor running a clinic at his residence. After classifying the factor incomes into three different categories, that is into compensation of employees, into operating surplus, and into mixed incomes, the third step to follow is to estimate the amount of factor payments made by each enterprise as well as by each sector. By summing up the incomes paid out by all the sectors to production factors, we will get the domestic factor income, which is also called the net domestic product at factor cost. So, net domestic product at factor cost is equal to compensation of employees plus operating surplus plus mixed income. In the final step, net factor income earned from abroad is added to domestic income to arrive at net national product at factor cost, which is the estimate of national income. So, in this way, we can estimate the national income by using the income method. Students, to estimate national income correctly by income method, certain precautions must be taken, like transfer earnings like old age pensions, unemployment allowances, widow pensions, scholarships, etc., should not be included in national income because corresponding to transfer payments, there is no value addition in the economy. However, it should be remembered that retirement pension is included in national income as it is a part of compensation of employees. So we can say that only factor incomes which are earned by rendering productive services are included in the estimate of national income. Income from illegal activities like smuggling, black marketing, etc., such incomes are also excluded from the estimate of national income as they cannot be easily estimated. Sale proceeds of second-hand goods, that is, the receipts from the sale of second-hand goods, should not be treated as a part of national income. This is because the sale of second-hand goods does not create new flow of goods and services in the current year. Or we can say that they are not part of the production of current year. However, commission paid on sale of second-hand goods is included as it is reward for rendering productive services in the current year. Likewise, sale proceeds of shares and bonds are not included in national income estimates because such transactions are not related to flow of goods and services. These are merely financial transactions which does not contribute directly to the flow of goods and services. Windfall gains like lotteries and capital gains, these are also not to be included in the estimate of national income, as there is no value addition corresponding to windfall gains. Imputed rent of owner occupied house is included in national income, as these houses provide services to those who occupy them, and its value can be easily estimated from the market value data. Goods for self consumption, or we can say the value of production for self consumption, must be included in the calculation of national income. Indirect taxes like sales tax, excise duty, such taxes tend to increase market price of goods and services. These taxes are included in the estimation of national income when we calculate the national income at market price, but when we calculate or estimate the national income at factor cost, the indirect taxes are not to be included in the calculation of national income. Corporate tax, dividends, and undistributed profits, they are all components of corporate profits. Once profit is included in the calculation of national income, any of the above components, such as corporate tax, dividends, and undistributed profits, should not be separately added, as they are the components of corporate profits, and profits have already been included in the estimation of national income. Income tax is paid out of compensation of employees, so it should not be separately added. Similarly, gift tax, wealth tax, taxes on windfall gains, they are paid not out of current income but out of past savings of taxpayer. So these are not to be included in the estimation of national income. So these are some of the precautions which must be taken while calculating the national income by using the income method. Thank you.